This is Eric Mwather with Mwather.com for the last week of May 2012, week beginning May 29th in the US because of a holiday. We are looking at a market here that has had a huge pullback since the beginning of, since late May, beginning of April there. Big pullback, and we see that the Nasdaq is now on the Nasdaq daily trading below this breakout level here, trading below the 150-day moving average, and trading now trying to hold firm above the 200-day moving average. So the market is really at a point where you might want to see a rally if you're bullish, or at least you want to see the market defend the 200-day moving average. Now really this doesn't give us direction in terms of where the market wants to go, but short term, what I can share with you is that the only way the market starts moving higher is if we can move out of above this declining RSI top lines here. If the market can move above that, then we might get a short-term reprieve and we see the market moving higher. So the market does need to move higher, or should we find resistance then and move lower, then you expect the market to at least test the 200-day moving average, if not lower, on the Nasdaq daily chart. So we need to break out above this RSI declining top lines short term if the market is going to rally. If we take a look at the hourly chart for the Dow Jones, you see that this is an area on the RSI where we, right here is where we had this big drop here. This trend break began when we broke below there, which corresponds to this RSI level, and this is where the market is finding difficulty in moving higher. So the only way the market is going to see higher prices short term is if the market can break out of that range on the RSI. Otherwise, this RSI on the hourly chart is a resistance on the market. That's why we've been finding it difficult to keep moving higher, and as long as the market can't move above that RSI level, then we expect markets to continue being under pressure. Again, a breakout suggests that the market is going to move higher. Resistance right now confirming the market still under downside pressure. If you take a look at the Dow Jones 30-minute chart, you'll see that this double blue line here is where the market has been finding difficulty over the last couple of days trying to rally. It hits that level and pulls back. So unless the market can break out, we are going to continue seeing downside pressure on the Dow Jones. Again, a breakout changes the picture, which suggests that the prices are going to be pushing to the upside as this technical development takes place. So right now we haven't seen the breakout, so really we are waiting to see how low this market goes, and when we get a breakout, then maybe we can play upside short term. Again, if you take a look at the price channel, if you take the highs in May, draw a straight line connecting those highs there, you see that we hit that level. So again, short term, the only way the market rallies if it can move above that level. Right now we haven't seen the breakout, so we have to conclude that the market is still under pullback mode. If you take a look at the Dow Transports, unlike the Nasdaq, major S&P 500 and the Dow Transport had a decent week. Third trading week of May, up about 4.25%, huge trading week on the transports, but that just brings it back to the declining 10-week moving average. So really that could just be a fake rally, which is really not going to yield a lot of movement on the transports weekly. If you take a look at the transports from a daily chart, you see that this area here has been either resistance in the marketplace over the last year or so. As you can see, was support there, breakdown level there, resistance on the upside, resistance on the upside. It became a buy point here once we broke through that, and then it's found support here, again there, but now we're in this level here. So this rally here could store right there. In other words, maybe the Dow Transports was just staging just another fake what I would call not really a bear market, but fake bounce, which is just a trap for bulls before we head lower. Now the good thing here is short term we see that the Dow transports are finding support on the 200-day moving average. So maybe there's something to this, but the only way I can personally think that the markets are going to move higher is if we get another breakout on this declining RSI top lines. Unless we get a breakout, I'm going to conclude that this market continues being under downside pressure. Let's take a look at the Brazilian market here. We see that we are now trading way below the declining 50-day moving average and way below the 200-day moving average. Really, that is not where you'd like your market to be if you want to see the market move higher. So there's a risk here. We might see lower prices, but short term on the RSI there's hope, because if we break out of that range, maybe we get some short-term bounce as far as this index is concerned. So right now finding resistance on this level here. If we break out, we see higher prices, but as far as I can tell, this is pretty much a broken market. There's a possibility of downside pressure is very high, given the fact that we are trading way below the moving averages. So the risk is for further downside action. If you take a look at the Brazilian market from a weekly chart, you see that take the highs of late 08, highs of summer 2010, draw a straight line, you see that we are now trading exactly hit that level. So again, we could bounce off this support line here, we could bounce, but yet if we don't bounce and we slide further, if we break this trend line, then it's going to be floodgates open and we're going to see much lower prices at a faster pace than we've seen recently. Again, just not any signs of life on this chart as of right now. If you take a look at the Footsie, what I see here is, you see this market trying to hold support level here. So either this is a bounce level here, or if further weakness and we break down, then we're gonna see accelerated move to the downside. So really the market needs to decide that it wants to bounce from this level, or whether it's gonna break down and we see further prices to the downside. Really the fact that we are trading below the moving averages makes me believe that it's gonna take a really strong move to correct the charts. Otherwise the charts are really broken. If you take a look at the Footsie again from a weekly chart, we got that 10-week crossing below the 33-week moving average there, which led to this big drop. We have another fresh crossover there to the bearish crossover, which again has already left the market pulling back. Now this support here, now remember this chart is, we'll see this kind of formation on most of the major world markets. So we're either going to find support there and a bounce, or we break down and we see really an accelerated move to the downside. That's what it seems like here. Now if you take a look at the French market, you'll see also the same kind of development here. We have this declining line here, the ascending line here, which is either going to be support area in the market or a bounce. Either a bounce coming off this support or we break down. Now you'll notice that even though we are making lower multi-month lows here on price, I noticed that the daily RSI, as far as the French market is concerned, is improving. So this could lead to a nice bounce. Now, so we have the scenario where the technicals are improving, price is going lower, we might get a bounce. And on the other hand, should we find that we break below this trend here, oh boy, then that's going to lead to really lower price, which is going to coincide with a break below that level. So the RSI needs to hold firm, but the thing that's really not positive for most markets is the fact that we have declining 200-day moving average, declining 50-day moving averages. So really the technical picture is not good. It's not a market I can trust, because you just have a lot of negative energy. If you take a look at the Kospi, South Korean market here, you see that again, take the 2008 lows, 2009 lows, summer 2010, 2011 lows, you find that we are exactly trading at this level here. So this could be a bounce level in the market. Could be, could not be. Again, if you take a look at the RSI, take the lows of 2008, lows of late summer 2011, to a straight line, you see that we are bouncing exactly on Q right there. So this could be where world markets find some technical reasons to bounce. But again, the charts are really broken. Monthly and weekly charts continue being very bearish. We had a crossover there that led to big drop last year, and now we are staging another bearish crossover on the moving averages. Could be leading to much lower prices, which is going to suggest a break of this line here, which is going to let the floodgates just wide open, and not the market you want to really be bullish on. If you take a look at the Kospi from a monthly chart, you see that from a monthly chart we are trying to break this RSI trend line here on a monthly chart. That's not good. That break, if it continues breaking that, that's not good. Month to month, like I say, you have a lot of negative things going on in world markets. Again, the Kospi, the fact that the MACDs are pushing and breaking this line here, and maybe even break zero down the road, just to suggest absolutely negative markets down the road. If you take a look at the Japanese market, the Nikkei, you see that support from 2009 lows to a straight line to the late last year lows. We are exactly trying to find some footing here. Either we hold and we move higher, or we break down and we see even much lower prices, even though we've seen a huge drop in the Japanese market, but we could still see further break. If you take a look at the MACDs again, you see that should we break that trend line on the MACD, that suggests even lower prices might be what we experience. Take a look at the CRB, the commodity ETF, commodity index. Really, we were trying to hold this level here right there, which has been an area where was resistance there, nice buy point level there. It became support there on the upside, support there, support, and now we see that we've broken below that. That means that this is now gonna be a ceiling for this market. In other words, we had fresh 52-week lows here as far as the commodities are concerned. I think we continue pushing lower. Just doesn't look good. If you take a look at the euro, you see that the euro is a fresh 50 multi-year low, going back all the way to the to 2010. Last time we saw such lows. So this is not a market that looks healthy to me. Again, you see that the moving averages are making a fresh low there, fresh break of the moving averages. Just lots of negative energy as far as the euro is concerned, which means the dollar continues being strong. Now if you take a look at the GLD, again, as long as the GLD is holding above this level here, as long as it's holding that level, which is about 15,550 on the gold index itself, so I think it's about 1556, give or take. As far as gold is holding above that level, gold should be okay, unless it breaks down. But as far as the GLD is concerned, this about the 151 level here, as long as it's holding that level, which was a nice buy point level here, and then has become support on multiple occasions, as long as it's holding above that, maybe gold continues being in play. Another way to look at this is take a look at the DZZ, which is 2 times bearish the gold indexes. As long as the DZZ has not broken out above this level here, which has been resistance going back to September of 2011, as long as the DZZ can't break out above that level, gold should be in play. But if this instrument breaks out, that's gonna suggest gold is gonna be breaking down, and this index is gonna ETF is gonna be trying to move to the upside. That might be the case. We'll see what happens, but we need to watch this level. If it breaks out, you wanna at least own this one short term or short gold. but for now we haven't broken out. So I say, I'm gonna give gold the benefit of the doubt here. But if this instrument breaks out, I would rather short gold or on this one, because it's gonna suggest the gold is gonna be under pressure. Now take a look at the VIX, because should the VIX break out down the road above $25.10, which is this high, recent highs on a daily closing high, if it breaks out above this level, you want to really be short the market. So watch this level here, because if we see a breakout above this level in the market, as far as the VIX is concerned, it's going to suggest that the market's going to be on a fresh leg down, and it might be a good time to short some stocks there. So watch this level here. If we can't break out above this level, then maybe the market is going to be back in play short term. As far as the dollar is concerned, we see that this week the dollar broke out to multi-year highs going back to September of 2010 again. So this is a multi-year breakout on the dollar. Nice move. So we need to be, stay away from the commodity space for now, because this is really a nice breakout. The one thing that really bothers me as far as this breakout is concerned is, if you take the highs of this is a weekly chart for the dollar. If you take a highs for the dollar on the RSI and the highs of early 2011, 2010, 2012, draw a straight line, you see that we are trading at this level here. Should we find ourselves having a down week and finding resistance there, that's going to suggest that gold, the dollar has peaked for now around that level, and the fact that commodities are going to be back in play. So even though we are seeing a breakout here, the RSI is telling me to watch out, because you'd like to see, if you're bearish, you'd like to see the dollar continue moving higher, so this breakout stays in effect. But if we find ourselves confirming resistance here, that's going to suggest that the dollar has peaked and the world markets are going to be back in play, at least short term. This is Eric Muathe, Muathe.com. Net, in conclusion, we have very bearish weekly charts, very bearish monthly charts, signs of life, slightly some signs of life on the daily charts, but really month to month the market continues to be under tremendous downside pressure. Again, good luck, peace, and blessings.